Hey, Rafi, welcome to Let's Talk. Thank you for time coming and joining me actually today. And of course, for anybody listening today, to having a true legendary person uh, over and having a real talk, as I call it, real time. Hard talk, but hard talk, our own version of the region. Rafi, you've been in this region over 40 years and starting from a very sort of, I'd say, handwritten ledger bankings up to what we have today in from AI to automation to almost virtual banking that what we see today. And you've been with JP Morgan, Citibank, Standard Chartered, and HSBC the longest stint. And also actually what we see today in everyday lives is the Islamic banking, what we have in HSBC or other banks across the field. Really, what it would be great to understand for some of our listeners and what they see today on social media, what they see in kind of press from, I'd say, least experience, but of course they have experience in their own field, but they don't really get the real understanding of the economy, the financial implications, linked to the real estate, to actual businesses as a whole. That's one. And the other is really, it will be nice to understand where does the region now lie. Let's say, assume post the current conflict. We've seen, of course, we had the financial crisis, we had the COVID, and we now have a geopolitical crisis. And post that, where does the region lie? Where does the region go? And also, where does a dollar follow? Is more importantly. So thank you very much for coming, Raf. Tell us about your time and when you first landed in these shores. Did you think you were going to last 40 years? That's the first question.
Thank you, Asif. It's a great pleasure to be here talking to you. If I was to recall my journey to date, I think it's been a very interesting one. And a lot to learn, a lot to have taken in, and a lot to have applied. So I came as a teenager with my parents to Abu Dhabi in 1976. Our mother used to, stay up at night and cry, where the hell are we, right?
Interesting.
And we'd say, every time you stepped out of your apartment or your villa, you'd come back home with a foot full of sand.
Right.
Right. And Abu Dhabi had two roads, the Corniche and Sheikh Hamdan Street.
Right.
And we were living right behind that. And, from there to what we have a fully blown out metropolis today, in under 50 years it's not just an achievement. I think it's a miracle, right? And the way the leadership of this country have applied not just common sense, but a very well-planned investment into the country, I think is an example in every single business MBA across the world as to what the UAE has achieved, not just financially, but also economically, also socially, and internationally. Right? And I think those are key aspect of how this economy has been built over the last 50 years. When my parents arrived here, there was no UAE dirhams. It was Indian rupees and every other currency that you could think of. There was no post office. There was no telephones at home. There was just the Ittisalat office, and one would have to go there to make a call. So from there to where we are today, I think, as I said, is just an enormous journey, and all credit to the leadership that have navigated through the last 4 decades or 5 decades of relentless development of the country. So that is where it. In those days, it was very funny. When we had to come to Dubai for anything, it would take us 3 hours, right, on a Range Rover or on a 4-wheel drive, because there's only one track road.
Right.
And there were trucks coming from all directions.
Right. And the camels.
So from there to a 45-minute journey between Dubai and Abu Dhabi, now with Etihad Rail, it's just a tremendous achievement. So yes, and as you rightly said, those days banking used to be handwritten and in ledgers, and today we just not only have technology, we have AI driving that business. So again, the embracement of technology, the embracement of can-do attitude has made UAE what we are today. So yeah, we should be all very proud of being part of this journey.
Yeah, and of course, you being here for so long, and you started in the banking arena, and you've seen various milestones achieved through the development phases, from being local banks to international banks coming in, and those international banks taking lead in many aspects. And then, of course, that knowledge passing down to the local banks. How is that transition? How did that come about, and what was the vision, thought process? But also, where do you think the next, the runway looks like in that area?
So you see, banking has moved in stages. So in order to create an internationally standard banking system, you need internationally standard regulator. You'll need what we call a yield curve, a bond market, so that people not only go to a bank to borrow money, but they can go to the market to borrow money, right? You need to see standards of compliance and regulations, which has been a journey which has been built over couple of decades, 2-3 decades now, right?
Right.
And it's tried, tested. I remember my days of coming back from London in 2002 and joined HSBC as a debt capital markets person. There was no yield curve. There was no intermediary lending. There was only, corporates would go to the bank and ask for a loan, and the owners will give a guarantee, and the loan will get reimbursed, right? From there to speak to the owners of these corporates to say, look, you not only can go to the bank, but you can also go to a market. So HSBC was literally a leading foreign institution to have established the first capital markets instruments in not just the UAE, but I think it's also in the region. And the best example of that is the debut bond of Emirates Airlines.
Right.
Right. And that was one of the biggest achievement that I can, say that I have been part of. And since then, the market has not looked back.
Right.
It is now a multi-trillion-dollar market with a lot of different varieties of maturities that creates a yield curve.
Right.
Right. And then people can use that yield curve to price loans, to price bonds, to price long-term debt. And not only, did it stop with the corporates, the sovereigns have used that and are still using it and have been successfully been able to develop that market in what we see as one of the biggest banking achievement for not just the UAE, but also for the whole of GCC.
Right, right. I mean, this is quite interesting because when that bond market and yield curve started to come, and especially the, institutional lending internal, we saw a massive push into the real estate sector because that just had a natural knock-on effect. Because then, whether it be a sovereign developer or large private independent developer was able to and go and raise capital, as per se. So how do you think that impacted the real estate of what we see today?
So, you see, banks don't have infinite capital. Capital for a bank is limited.
Right.
And they can only lend a percentage of that capital to a particular industry.
Right.
Right. So when bond markets arrive, it makes that capital bigger because you're not only using the bank's capital, you're using capital from various other investor pool.
Right.
So that accelerated the rate of development much quicker and much faster
Right.
than if the developers were only reliant on individuals to buy their property and then put up the money or go to the bank to get a bilateral loan.
Right.
Right. Instead, they can go to a larger pool of investors.
Okay.
Right, which certainly accelerate the rate of growth, not just locally but regionally as well.
Yeah. I mean, we've seen that with 3-4 developers who have grown to Joe public in the street. When they see this developer everywhere, they think, "Oh my God, what is he doing right or what is he doing wrong?" And of course, in the last, I would probably say, in the 2 months, with the market looking at some kind of slowdown or being really realities being checked on, the developers are asking questions where projects they have, from single project to a multiple projects, are looking for either some kind of financial capital, leverage, raising capital, but they don't have the experience. Do you think it's only open that kind of funding to a larger size, or can that be applied to single developers?
So single developers, Asif, if you look at someone like a Bingatti, someone like the other smaller ones, have raised money through the bond market. Right, and very successfully raised money through the bond market. Yeah. So the bond market is not just available to the Nakhils of this world or Imars of this world. They're also available to the more specialist, more niche developers.
Right.
And they have taken advantage of that.
Right.
Then comes the next level of investor pool is private capital.
Right.
Right. A lot of the big private capital firms are now based in Dubai.
Right.
Right. They will, be happy to look at projects and can individually assess them and can use private credit market to fund those development.
Okay.
So not only do you now have the use of the capital markets, but you also have private capital.
Right.
Which 10 years ago was not available.
Yeah.
And then you have the other set of pool, which is the family offices.
Right.
The family offices, most of the family offices have anywhere between 25 and 35% allocation of capital into real estate.
Okay.
Whether it be ownership of direct assets, or whether it be ownership through a project company, or whether it be ownership through a capital markets product.
Yeah.
So you now have multiple asset pool that a developer can go to, right?
Right.
And then the most oldest one is you go to your friends and family.
Right.
Right.
Yeah.
So you have more than almost a half a dozen kind of channels of funding that a real estate company can look at, and they use it very efficiently. Sure. Don't forget, you've been here long enough to see the development of the regulatory side of the real estate business.
Yep.
Nowadays, escrows are very well regulated, very well monitored. The regulation of buying and selling has become a lot more controlled, so people don't own it by night and sell it by day kind of environment. You have restriction when you can buy, what you can buy, and when you can sell.
Yeah.
So all those things make the real estate market a lot more safer investment for banks, for institutions to come into the market. to this market.
Yeah. If you were to give advice to a independent developer who's maybe got, let's say, 3, 4, 5 projects at the moment, and is probably still holding, unable to sell 50% of the inventory, what should they look at in terms of if they're thinking of going to the bond market or raising capital? What are the options that you think they would have today?
Again, it depends very, specific to each developer. What's their cash flow situation? How far up they have gone into the development phase. Is it just finishing that is left? Is it just they are, breaking ground at this point? So each developer, we would give advice in a way that where they are in the journey. Right. So there's not one size that will fit everyone. Right. So the advice we would give would be to developers based on where they are sitting currently. Right. Do they own the land? Is the land mortgage free? Right. And so on and so forth. There are plenty of ways they can look at. Right. Have they look at Sharia compliant financing to open up another door of investor pool. Right. So I mean, I'm happy to look at individually for you to share with me whenever you want. And we can work out solutions. I mean, it's all about providing a solution.
Right.
And solutions are generally, quite bespoke and quite tailor-made to that.
Right.
We, in finance, what we say is we don't have antibiotics. Right. Because, it's driven by particular assessment and a particular...
Okay. I always thought you might give tranquilizers, but anyway.
Probably.
But that's the only other thing. But yeah, I see what you mean. But also at the same time, I know you mentioned the other avenues of financing, which was the Islamic finance, the Sukuk. And I know, you are the Mr. Inventor, or part of the team. Do you see that becoming more into the real estate structure finance, or is that still... I
mean, Sukuks have always been very niche.
Yeah.
Right. And it's not your bulge bracket financing schemes. These are niche financing.
Right.
Depending on the size, the asset, and the investor.
Yeah.
Right. If they all fit in the box, yes, it's doable.
Right.
Then now the market has got, very well versed with documentation, with the Sharia boards and so on and so forth. Back in the days, everybody struggled to find a common board structure or a common documentation structure that will fit most issuers. But right now, a lot of those have been overcome over the years, and investors have become comfortable. Issuers have become also quite comfortable in issuing that. Right.
Yeah.
So yes. Again, as I said, each developer will have a requirement which will fit a particular type of investor. Right.
Okay.
I mean, for example, biggest deals have been done in Sukuk world outside the GCC. Both in Malaysia, even the UK government issued a Sukuk at one point.
Yeah, well, this is what my next question was going to be. That historically, UAE or stroke GCC has always imported the know-how.
Yeah.
Right. And this is really, I think, our next phase of a journey that we will probably see from this part of the world. And it's coming to a point where we're now exporting the know-how. Okay. And Sukuk is one of them. Okay. But the other most interesting thing was a few months ago, a major transaction in London. Debt was provided by 2 UAE banks, by them. They were the lenders, which was something totally unheard of.
So that's private capital for you.
Yeah. So how do you think that's likely to change of institutions or banks from here lending in European markets or UK markets? We're exporting the know-how.
Look, the banks that represent this part of the world have well-established branches in Europe, right? The likes of Emirates
Which,
NBD, the likes of QNB, the likes of Riyadh Bank, they've all had Fab now have all had very well-established presence in European markets, right? And they have deployed capital in Europe through various specially created vehicles, right, into businesses in Europe. For example, one Qatari institution runs a mortgage business in the UK.
Yeah.
Right. They own that mortgage business.
This is interesting.
Right. So there are avenues that all of these GCC institutions have made a big mark in Europe. Then you have the wholesale investments.
Right.
Right. The likes of all of these sovereign wealth funds. They have been buying trophy assets in Europe for the last 30 years. And it's not a phenomena that's going to go away anytime soon, right? It's not that tomorrow morning they'll wake up and say, let's start selling these businesses. No. Yeah. They're there for the long run. They are there as an integral part of those organizations. I mean, people like ADNOC, people like Qatar Gas, people like Aramco have got massive businesses, right, overseas. I mean, if you look at Dubai's export, what is the best export from Dubai is Emirates Airlines, right? It's the best airlines in the world. Look at DP World, right? Slowly, quietly, they have built a huge international franchise, right? So these are very well-known exports from the region, and it will continue to grow.
I think this is really interesting because we're now at the same time seeing consumer brands which initiated here and have now shown their presence in Europe, in London, particularly London, US, etc. So that's interesting. But also now in finance, coming back to real estate and the finance, we're now about to hit into another era where, of course, historically, a lot of off-plan projects have been sold by developers, mainstream developers, government-backed developers, independent developers. But now we've now got eventually the financing arms, i.e. the mortgage lenders, i.e. banks, are saying, okay, great, we will now align with some of these developers. And because we have the trust and the confidence in delivery of these projects, we will now finance off-plan projects. Now, this is a game changer because, of course, it happens in Europe where you buy and you pay your deposit, and the banks, kick in with a mortgage, and the bank feeds the developer due to construction stages or whatever, and you, as the owner or the end buyer, have a product or mortgage product at the end of the day, completion. It gives you, and then the two elements. One is, of course, developer has to have a trust, and the second is the buyer will have enough confidence if the bank has done the due diligence on the developer, he will get the product that he's actually paying for. Do you think that market is likely to grow or change, or what do you think the impact will be?
Look, that's the natural progression of a real estate market. I'm sure 50 years ago, if you went to Europe, you would not find, banks financing developers.
True.
50 years down the line, banks are comfortable finding. And why is that? Three things. One is the information required for a financial institution to assess the risk was not available in those days.
Right.
It's available. It's required today.
Right.
Two, the relationship between a bank and a developer takes time to grow. True. It's the trust.
Yeah.
Right. It's a trust, and it's a tried and tested methodology to see whether this developer can actually, deliver something.
Right.
And the third is demand and supply.
Yeah.
Right. More and more people wanting more and more housing to live.
Yeah.
Right. So there's a demand globally for more properties, not just in UAE. I mean, people say there's like 2 million shortage of property in the UK.
Right.
Right. It is those demand supply, those regulatory framework have allowed financial institutions to become more comfortable in doing a development mortgage, right? And also the fact that in here, the mortgage regulatory bodies have tightened a lot of the legal framework under which, what you can repossess, what you can, ask for a aggressive sell down, and so on and so forth. So those things have actually helped this market here for the banks to look at development finance.
Yeah. And in terms of taking all these factors into account, given a current economic cycle that we're in, and your past experiences over the years, what do you think this cycle looks like? I know it's $1 million question. Everybody's asking everybody, what do you think is likely to happen tomorrow? It's very difficult.
Very difficult, yeah.
But of course, you've been in the financial world, been in the various downturns, upturns, etc. Where do you think we are today in terms of the economic cycle?
Look, if you asked me this question 3 months ago, I would say that interest rate worldwide, would be looking to come down.
Right.
Right. Because there was stability, there was low inflation, and there were modest growth. So, compared to these three things, we'd have said, US interest rate would start to come down. That will bring down interest rates globally, and so on and so forth. Right. 28th of February changed a lot of that perception overnight.
Right.
Right. A shock of oil price over $100, instability in the region, logistical disruption of delivery of oil and natural gas products, disruption of export of fertilizer from this part of the world, right? So this is not just a, one trick shock. This is a multi-trick shock. And each of these shocks will represent a particular outcome. If it is the fertilizers not reaching the farming community, it will result in a shock in food prices.
Right.
If the oil and gas products are not able to reach the end users, it will end up, you paying $5 a gallon for a gallon of petrol in the US. That will have negative repercussion within not just the finance community, but also domestic community. So all of that put together, I think we are at a stage in the cycle where patience is required, where people will have to analyze a lot more data than they have. But I think countries are quite resilient, especially the G7, G20 countries are quite resilient. They will be able to not fight it, but maybe be able to overcome some of these through various pockets of options they have. I think all in all, I think rates may go up very slightly between now and end of the year.
Okay.
But I think if situations normalizes in this part of the world, I think we'll see back to normal economic environment. This is not a normal economic environment.
Right. So really, I think by the end of the year, we should start seeing some sort of clarity or some kind of movement in stabilization on it.
I mean, what happened on the 28th of February was never written in an economic textbook.
Right. True.
Right. So what we are experiencing today is not a textbook problem with a textbook solution. Right? This is a problem which will require a tailored solution.
Right.
And patience.
So, I mean, if the message to the business community, the bank, developers, and commerce, patience is the key.
Yeah.
Right. This is what you would recommend at the moment.
Yeah.
Looking at it from that point of
I
view.
I would just say, look, review the business more often than you have right now, because it's a ever-changing environment. So review, be nimble, be flexible, and have a willingness to change.
Right. Because of course at the same time technology is evolving. Right. Look, you've had people working for you from different with you and under you, and you've managed. What do you think message for you would be to a leader now of an organization?
I say embrace technology.
Right.
Right. Because it will give you efficiency.
Right.
And efficiency means you have greater chance of making a business more profitable.
Right.
The one thing I would say to most senior management or managers or owners of businesses is the biggest resource you have in a business are your people.
Right.
All right. Choose them wisely, be transparent, and communicate.
Right.
So those are your three ingredients of having success in your business with people around you.
Right.
I mean, I'll always give an analogy of a football team.
Right.
Right. You can have the best captain, but if you don't have the other 10 people working with you, you don't have a successful team.
Very
right.
True.
So you can be the best captain in the world, but if you don't have a decent goalkeeper or a line of defense, you're not going to succeed.
True.
So it's a human capital.
True. Rafi, really, thank you very much for giving us real insight. And I think there's a lot to learn, a lot to actually take on board. But also, Rafi, I'm going to invite you to our next discussion, which is a very important one. As you know, corporate social responsibility on the multinationals is very important. So I'd like to join you to the next talk, if that's okay with you.
Thanks, Asif. Yeah, it's a great pleasure sitting and having a chit chat with you.